Welcome everybody to yet another call, and today we have a special guest. His name is Nickson Omondi from the Kenya Revenue Authority, and today we want to talk about taxation in the crypto space. This is a topic that has been of concern not just in Kenya but across the continent. This is a person who I believe is well qualified to respond to some of these concerns and queries. And I think without further ado, I would like to sort of introduce Nickson, and maybe he can let us know who he is, what he does. Hi, Nickson.
Hi, thank you, David. A pleasure to be in this space. So I'm Nickson Omondi from Kenya Revenue Authority. At Kenya Revenue Authority, I'm a manager in charge of the Digital Economy Tax Office. So we are basically the team that is mandated to implement the laws around taxation of the digital economy. So I'm sure we'll have a wonderful conversation and we'll be able to explain as much on areas on the digital economy, specifically on the digital assets and the crypto taxation. Thank you.
Thank you as well, Nickson. Again, thank you for just taking the time to even educate our listeners and our readers as well on this. It's actually a topic that concerns a lot in the crypto space. Maybe the first discussion point would be the state of the current digital tax regulation in Kenya. How does that look like, and how does the Kenyan taxation law address crypto transactions and crypto tax?
Yes, within the wider digital economy, we have laws that touches on taxation of the digital economy. From 2021, we have implemented digital service tax and also VAT on the same services. The two taxes are specifically applicable to non-residents. When I talk of non-residents, I mean those entities or multinationals that do not have offices in Kenya physically, but we as Kenyans consume their services. So it was important to also let those guys who are earning from Kenya also contribute to the growth of Kenya. The same way you and me, David, if we were doing business through digital means, we will still be paying our fair share of tax. So it was also important for those other people to also pay their share. So later in 2023, effective 1st of September, there was a shift in law to also bring on board those who are earning through crypto. It has not been clear before then whether, if, for example, I buy Litecoin today, okay, and keep the Litecoin for 2-3 years, then if the value is favorable, I dispose of, I ramp up, for example. The question is, am I eligible to pay capital gains tax? Am I eligible to pay a turnover tax? Am I eligible to pay a withholding tax? The law was not very clear. But, in the spirit of Article 210 of the Constitution, that all of us have to pay our fair share of tax. So it was also important to also bring on board this category of people so that we are all able to contribute to the development of our country. So the current taxation regime, which became effective from 1st of September through Finance Act of 2023, says that if Nickson is selling his Litecoin through an exchange, then the exchange is then required to pick a 3% and remit that 3% to the government. So that is the current legislative framework on taxation of cryptos. And it doesn't end with the cryptocurrency. The law also extends to any form of a digital asset. Whether you are looking at a token, whether it's a non-fungible token or fungible, so they are all covered under that legislation.
All right. So it's clear the law does require that crypto holders pay tax. Nickson, let me ask. Now, for someone who's approaching taxation, then say a crypto exchange, then now that they are required to pay tax, how are they supposed to remit that tax? I think this is a question you've gotten before. How do you pay tax when the Kenyan government will not even allow you to say open a bank account or run, a traditional account?
I agree. I know there's a wider discussion on how that can be managed, but we'll discuss when we get there. The Central Bank of Kenya gave an advisory that let banks not deal directly with the crypto exchanges, so that you cannot use your bank account to on-ramp or to buy shares, to buy the tokens or to buy the cryptocurrency. But David, some very funny thing is there are case laws in Kenya and the rest of the world that says even if an activity is illegal, tax is not illegal. It is to ensure that even those who are earning through whichever means contribute their fair share of tax to the development of our country. So what basically happens is if BitKE gave an advisory, and remember they didn't say it is illegal. They only said you can't transact directly with the banks. But Kenyans have a way of transacting, whether through M-Pesa, through international payment channels, PayPal and the like, and therefore they're engaging in the activity. And because they're engaging in an economic activity, it is also fair that they also contribute to the development of Kenya. And the method of how they do comply is by the exchange themselves managing the whole process for them. I think that is a simplification in this law. Instead of you looking from Dogecoin to a stable coin, then to a fiat, let the exchange do that for you, because the exchange will be collecting so many of the digital asset tax from several players and then remitting it to Kenya Revenue Authority. And David, it has been done. I think maybe later we'll speak. Their taxpayers are already paying the tax. So we believe then the process is not as arduous as maybe somebody might think.
All right. I think the last time we talked, you also said people can come to your office and you can advise them on how to pay the taxes.
Definitely. We are available. We are here.
All right.
We can even use Twitter Space. We can be on Twitter Space and explain the process.
Okay. All right. Nickson, I think moving on to the next question would be around the digital service tax. I remember you did talk about it, I believe 2021, 2022, how the crypto owners were under the digital service tax. I believe that has changed. You just mentioned the new law. Maybe you can clarify again, how does the digital service tax come into play as well when it comes to crypto?
Before 2019, we didn't have a mechanism of taxing any non-resident who is earning from Kenya. So if you had similar services, let's take an easy example. If you had the David Cinemax, where you stream movies for people at a fee, definitely you will pay your tax to the government. And if it's more than 5 million, you'll also pay VAT. But we also have XYZ who is streaming movies from outside the country, and they were not paying even a shilling. How do you expect David and that XYZ to compete? It was difficult. So to ensure that everybody is treated equally, the law was changed in 2019, but again, more specifically in 2020, so that from January of 2021, even those non-residents were also subject to digital service tax. But digital service tax is very particular on services. We have a positive list, a list of what services are subject to digital services tax. It was not part of that list. Effectively, 1st of July 2021, digital service tax was ring-fenced. I see my network is a bit unstable. Maybe if it's back, you can tell me yes?
Yes, the last point I think we missed. Maybe you can repeat that.
Good. So what I was saying is, effectively, 1st July 2021, the law was amended to ring-fence digital service tax to non-residents alone. Okay? So for a resident person, they don't need to they have nothing to do with the digital service tax. That's the first line. 2, when you look at, for example, an exchange, remember an exchange has its own income where they collect commission by people, transacting crypto traders, ramping and exchanging and transferring and converting, all those processes. Remember, the exchange itself earns from Kenyans, for example, those who have been onboarded on those platforms. So the exchange is offering a digital service, and therefore the exchange has been doing their digital service tax filing and payment, but they have not been collecting the digital asset tax, because the digital asset tax is the tax of the crypto trader, not for the exchange, unless the exchange also does exchanging of the coins, okay, which they own. Then that will then be debatable on whether they are supposed to pay or not. So for the exchange commission, they do digital service tax. In fact, they also collect VAT. They also charge VAT and remit the same to the commissioner. Platform will account for DST, but they'll also account for DAT. But the DAT, the digital asset tax, is not their tax. That is tax of the traders. So that is the interplay between digital service tax and digital asset tax.
All right. So I think that's clear. The next question would be then how, I mean, if an exchange is local, if there's a Kenyan local crypto exchange, how does that apply?
Yes, for a local crypto exchange, remember, still the tax is tax on Kenyans who are exchanging their cryptos. It is not tax on the exchange. But if the exchange is local, they are not subject to DST, because then they pay their normal income tax. Remember, I said DST is ring-fenced to non-residents alone, income of the non-resident. But DAT is income of the crypto player or trader. The exchange is only an agent for KRA for purposes of collecting and remitting and accounting for it to the government. As a tax so collected is final tax. If the exchange is non-resident, we will register them under simplified registration mechanism. They will also collect the 3% and remit. And remember, the tax is not theirs, it is tax of the traders, the Kenyan traders who are exchanging their crypto assets in the exchange.
That's clear. I hope it's clear to the exchanges that will be listening to this. I mean, because there's so many taxes, it can get confusing. So you're not.
You are right. You are right. You are right.
Yeah. So I just for clarity, I think we will list that down, the different taxes that they are supposed to remit. Assuming that an exchange does not remit, Nickson, and as KRA, I know you have the mandate to enforce taxation. How do you go about it? So, some countries have clearly stipulated how they will do it. Does KRA have a process on how they will enforce taxation?
Yes. There is in the international arena, they call it garnishing provisions. So in Kenya, we call it enforcement measures. So if an exchange does not remit the tax within 5 days as stipulated in law, there's a penalty of 5% of the taxes not remitted. And then there's also interest of 1% per month of the amount not so remitted. So the penalties are quite heavy. So we always urge our taxpayers to comply. And then 2, if you totally fail to do that, because KRA can write to you and ask you, can we do A, B, C, D? And if you are not able to do, then KRA is mandated under the Section 96. If you look at of our law of the Tax Procedures Act, we can actually work together with other government agencies, the communication regulators, the central bank regulators, the financial reporting center, authority. We can work with them to enforce in terms of either closing your access of your site to Kenya, but I'm sure this must be under very extreme circumstances. We can also collaborate with a partnering country. For example, if ABC is based in England and is the exchange, we can always work together with the government of England based on the existing framework, what we call assistance, mutual assistance on collection of taxes, to enforce such kind of mechanisms. But if it's a local taxpayer, I think that is direct within our mandate. We can always do an agency notice. We can visit your office and understand why and all those kind of mechanisms.
I think that's good to know, so that people are aware of what happens if you don't pay taxes. Let's shift a bit to 2024 with the controversial 2024 finance bill. Would you mind telling us what's in there and how it relates to the to crypto taxation or the digital service tax?
So I was saying that the finance bill 2024 had nothing specific to digital asset tax. So it means the 3% within 5 days and all the mechanisms in law continues as has been. The only thing is that we've also lost very good proposals in the finance bill. One, it was also seeking to extend those who had not paid their taxes under the amnesty up to March 2025. So if there's any exchange that had not paid their digital asset tax, then if there were penalties and interest, then it would have been easy for the penalties and interest to be waived under the amnesty. It was also introducing waiver of penalties and interest. If, for example, an exchange was not able to pay the digital asset tax within the stipulated time, then they could request for a process of waiver once they justify as to why they could not pay in good time. So those are some of the things I think I could mention on the finance bill that would have affected the compliance levels of digital asset tax, but on the positive side, so that taxpayers would have got an opportunity for an amnesty on penalties and interest, but even going forward, they will also get an opportunity to request for waiver of penalties and interest where there are justifiable reasons as to why they couldn't either file in time or pay the tax in time, David.
Nickson, let me ask, I know KRA gives amnesty, going backwards, I don't know how many years. Now with crypto, do you retroactively go back and see who has not paid over the years? How does that look like?
Definitely. The amnesty was going back to December 2022. So any taxes not paid between December 2022 and 19, whichever year, they are all being automatically waived penalties and interest. Currently, the framework is closed because the law was never amended. The law ended effective 30th June 2024. So there's no more amnesty. And again, when we are looking at an exchange, we have to go back to September when the law was effective for digital asset tax. So if you have M&E entity that is an exchange and they are coming today to pay digital asset tax, we will actually request them to pay effectively from 1st of September. So they have to go back in time for their transactions and start complying from 1st of September 2023, sorry. So yes, it is also fair. You can't allow people to come in and say, I'll pay from the month I want, while we have people who started paying from September. I think in the spirit of fairness and of course implementing the law as the law is.
Yeah, thank you for that, Nickson. Now, let's shift a bit to regulation. It's a very controversial topic right now in the crypto space. Let me ask, how is KRA involved in the upcoming crypto regulation, particularly with a focus on taxation?
Thank you, David. I'm sure this will be good news to the industry. We might not be taking lead, and maybe I might not have a lot of information on the goings on in the task force, but I know we are well represented from our policy section, so that as we discuss regulation of the crypto industry or the digital asset industry, taxation issues are also discussed. You don't want a scenario where every government agency work in silos and those silos do not communicate with each other, or each person is pulling in a different direction. So I think that is why the team is multi-sectoral in nature, having everybody from all the financial regulators, including the Revenue Authority and even I think NIS and the DCI, because we know that in the crypto space there are also issues around money laundering, there's issues around fraud. So that is why a multi-sectoral approach has been taken. So as we discuss those other issues, taxation is also discussed therein, so that there's also streamlining in terms of government processes, procedures, regulations, and also the law.
Do you have an idea of where that process is so far? Can we expect it in a few months, in 1 year? When do you feel we will probably have regulation?
Unfortunately, I might not be very competent to talk about it because I'm not part of the team. I'm only aware the team exists, and they do meet regularly. So how far they are in terms of the timelines and whether they are going to give a report and whether the regulations are being drafted, I don't think that I'm privy to any of that information. So for now, I only know that the team is meeting regularly, and I think they have a bit of pressure to also fast track the process. So soon, rather than later, we'll see something from the government with that to that respect. Yeah.
Indeed, we hope it comes soon. I think it's
Sure.
much needed.
Sure.
Now, as we wind up, just for clarity again, Nickson, I believe this is really important to the players in the space. Just clarify again for digital asset holders and digital asset service providers, the different taxations they're supposed to pay. Maybe just to reiterate.
Okay.
Yeah.
So if you are in the crypto space as a trader, you buy, you sell, you buy, hold, sell. You move from one exchange to another. You move from one coin to another coin. Okay. Basically, your taxes will be handled under digital asset. The exchange which you're using to sell, for example, of RAM is supposed to collect 3% and remit to the government. So you don't do anything else after that. But if you are a miner, because I know even Kenya has miners, I don't know how much they have mined, then you are in business. So what you'll be doing is check the value of the coins you have been able to mine, then deduct relevant expenditure according to section 15 and 16 of the Income Tax Act. The profits you get, you tax at 30%. So miners will be taxed in that manner, but not the 3%. If you're a miner and you sell them through the exchange, remember the exchange still collects 3%. To you, that will be an advance tax. So you then need to come back and compute your taxes. So I think those are the key main taxes that will apply. Then for the exchange itself, they are supposed to collect and remit the 3%. In addition, their commission is subject to digital service tax and VAT. So them, they will account for DST, which is 1.5%, and also VAT, which is 16%, and remit. So you see, the exchange accounts for 3 taxes per se. If they have employees in Kenya and it's a local exchange, of course, there's pay as you earn, there's withholding tax, and a host of other taxes. But relating to the digital space, we are looking at those 3 taxes, David.
Some countries like South Africa have very tough penalties with the current regulation. I'm sure you've seen it, where they are talking about 10 years in prison time if you do not pay. Give us an idea if in Kenya, how do the penalties look like?
Thank you, David. It's good to repeat for clarity's sake. The penalty in Kenya is just 5% of the amount due. Okay. And if you don't pay in time, and then every month you fail to pay, there's an interest of a 1%. Unless there's fraud under the law, is where you pay double the tax. You can actually pay double the tax that is due if you are fraudulently evading the tax under this regime. In terms of imprisonment, I think those are now issues around conviction, which are not clearly, in our law, unless now you are convicted, is when now there's imprisonment and also payment of certain fines. But from the revenue side, it's very direct, 5% penalty, and also 1% for every month you fail to pay. Then the extreme, which I mentioned earlier, will include maybe barring your signals, access to Kenya. Okay, so that can be one extreme one. Another one is to engage bilaterally with the country of residence of the exchange in order to recover the taxes under mutual assistance on collection of taxes framework. So those are the mechanisms, David. And of course, South Africa is very punitive. I even saw the rates of digital asset tax in India are quite humongous. They look at a 30% plus a 10%. There are several rates in relation to the crypto world. I think Kenya is a bit fairer I don't want to say it's the best, but it's a bit fair compared to those other countries.
Indeed. Thank you for actually pointing out those examples. Finally, for as a tax agent, what advice do you give to anybody who's looking at paying taxes and best approaches over the years from your experience? What is that sage advice that you give people?
Advice is one is to keep checking with us. We are always ready with information. If you feel there's a certain tax regime that you don't get clearer, you can always engage us. We give you our interpretation and guide you on how you can comply. And with that, I think that is where such forums come in, where we educate one another on our tax obligations. But it's also important that you take an initiative to ensure that you pay your correct taxes at the right time and in the right manner. We wouldn't wish, to see penalties and interest being levied in the digital space, because the digital economy thrives on, we are able to do our things at any given time and whatever place we are in. So time and place do not really determine whether we are able to comply with these regulations and laws or not. And then lastly, the economists, and most of our good economists, the father of nations, the wealth of nations guy, the father of economics, Adam Smith, say that whenever you pay taxes, the market becomes a bit efficient. The government gets money to regulate the sector. By regulating the sector, it creates efficiencies, certainties, and also reduces instances of fraud. And where that occur, then recoveries are also able to be made. So it's important that taxes in this area will also ensure that there's efficiencies in terms of market operations and in terms of government intervention in case there are any issues in the digital space, together with the multi-sectoral body that is looking at the regulatory aspects of the sector. So I think those will be my comments to our crypto traders. Thank you.
All right. Yes, thank you. That's a nice way to wind up our discussion. Thank you so much, Nickson. We really appreciate the key points you've highlighted. We'll be looking out again, maybe to have a chat in future in case of hopefully soon regulation and any changes.
Thank you, David.